Welcome to the Deep Dive. We cut through the noise, get straight to the insights for you. Today, we're plunging into, well, the incredibly fast world of cryptocurrency. We've got a stack of really fresh sources, all articles published just today. June 18th, 2025, our mission. Pretty simple. Unpack the key nuggets, the surprising facts from these headlines. We want to help you get up to speed quickly on where the crypto market and everything around it stands right now. We've got market predictions, big regulatory shifts, some interesting moves with specific assets. It's dynamic, definitely. So as we go through this kind of whirlwind, think about this. What new connections can you spot?
Yeah, what really jumps out at me from these sources is just how intensely interconnected it all is. Public feeling, regulations, market moves, and they're not just fast, they're bouncing off each other constantly, often in the same day. These articles really show that dance.
They really do. And speaking of quick shifts and, the power of connection, let's start with a headline that shows the community's clout. Crypto accounts reinstated following massive XDAN uproar. I mean, massive uproar. That just screams drama, right? On a huge platform like X.
It does. And the crucial thing here is the power dynamic, between giants like X and this very engaged, very vocal crypto community. It's not just general public opinion. It's a specific influential group whose collective action can actually push back, change things on the platform. The fact X reversed course,
Right.
reinstated the accounts, it suggests they see the risk, the economic fallout maybe, or the hit to their reputation if that community walks or keeps pushing back. It kind of shows a vulnerability these platforms have with these, very cohesive, digitally savvy groups.
Huh, interesting. So it's more than just making noise. It's actual leverage points that platforms like X really have to think about. Does this maybe signal like a shift where user groups have more power over policy, especially in these niche but strong areas like crypto?
Yeah, it definitely raises that question, yeah. Platforms are maybe realizing that pushing away big active user bases, especially ones with economic weight, well, it hits their bottom line, their image. It might make them, a bit more transparent or responsive, maybe.
Okay, from social media clout, let's pivot. Something even bigger impact. Regulation.
Yeah.
Big news from the U.S. Senate today. A landmark crypto vote. They passed something called the Genius Act. What's the real story here, the significance?
Well, zooming out, the Genius Act is, it's huge because it's seen as the first major crypto bill. It's setting actual rules for stablecoins, how they operate, who oversees them. In the U.S., that's new. Before this, kind of a regulatory gap, its main thing. Mandating stablecoins hold equal cash or treasury reserves. That's basic protection, really, for users, for market stability. And the part about aiming to boost the U.S. dollar in the digital space, that's broader strategy, keeping the dollar dominant even as finance gets decentralized. It's not just a crypto thing. It's about the dollar's future in this digital world.
Right, a really big step for the U.S., setting clear lines. But while the U.S. is doing that, there's this interesting warning from Europe. Franklin Templeton, the big global asset manager, they're warning the EU may fall behind in crypto race. Feels kind of backward, doesn't it? Europe seemed like a leader in crypto rules for a while. What's the concern?
It does raise that global competition question, yeah. Franklin Templeton's warning is basically, despite early rules like MiCA, Europe might just become a corridor, meaning innovation passes through but doesn't stay. Talent, money, new projects. They might start in Europe but end up based elsewhere, like the US or Asia, where things are maybe moving faster now, adapting. It's a stark reminder, being first isn't everything. You need to keep the environment attractive, flexible, to actually hold on to that innovation.
Yeah, sounds like a wake-up call, maybe. Keep pace or lose out. Okay, shifting gears again. Market momentum. Let's talk Bitcoin. Demand seems, still remarkable. Headlines like U.S. spot Bitcoin ETFs see remarkable 217 inflows, signaling strong demand. What does that kind of money flowing in really tell us?
Those inflows, $217 million into the U.S. spot Bitcoin ETFs. They're more than just numbers. They're a key indicator, a barometer for how much institutions and just the mainstream are adopting Bitcoin. It means traditional finance players, funds, wealth managers, even regular folks through brokerages are getting comfortable actively putting capital into Bitcoin using these regulated ways. It legitimizes Bitcoin, makes it more like a standard asset you'd find in a portfolio, pulls it further from the fringe,
Right. And that kind of strong demand, it always gets analysts talking, predicting. And one prediction, wow, it's eye-popping. Analyst Brad Mills has this bold forecast. Bitcoin soaring to an astonishing price of $3 million per coin. That's a potential 100-fold increase. $3 million.
Yeah.
That number just makes you stop and think, doesn't it?
It really does. When you see predictions like that, so high, so long-term, The key isn't just the number. It's thinking about what the analyst thinks has to happen to get there. What shifts? What mechanisms? A price like $3 million for Bitcoin. That implies like a total rethink of its role in the global economy. Maybe adoption on the scale of gold. Or even replacing traditional assets for certain things. It would need a massive amount of capital, obviously. Continued scarcity. Maybe even countries, big companies, putting it in their treasuries. It's speculative, sure, but it shows the kind of huge potential some people see, long term.
Definitely food for thought. Okay, moving beyond Bitcoin now, where might the smart money be looking in the altcoin world? Our sources suggest some specific cryptos are being accumulated, getting ready for the next altcoin season.
Yeah.
They mentioned CRO, PI, and PPE. For people maybe less familiar, what's making these catch the eye of the so-called smart money?
Right, smart money usually means experienced investors trying to get ahead of the curve. And what's interesting here is the different reasons. For CRO, that's Crypto.com's token, the appeal is growing utility. Trading, payments, the whole Crypto.com ecosystem, it's being used.
Hmm.
PI, the mobile mining one, it's looking at a rebound because of a big token unlocks 68 million tokens. Now, unlocks can mean selling pressure sometimes, but with PI, it's different. It's tied to getting tokens out wider, boosting participation, so it's expected to actually spark more activity, more network use.
Okay.
And then PEPE, the meme coin. It's just showing bullish strength, good market sentiment, potential for quick gains based on, well, community buzz. An altcoin season, just for context, is usually when these alternative cryptos as a group start outperforming Bitcoin. Often happens after Bitcoin's had a big run and money looks for the next thing.
That's a great breakdown, thanks. But here's a twist. Something that felt, I don't know, counterintuitive. It's about Kaspa, KAS. Its price crashed, like 65% down from its high back in August 2024. But the sources say Kaspa top wallets keep buying KAS. Wow. So big drop, but the big holders are still buying. That's not the typical reaction, is it?
No, it definitely raises that question. What do they know? Or what do they believe, maybe? This thing, accumulating when prices fall hard, it's pretty common for investors with strong conviction, long-term views. It suggests these top wallets, these big holders, they believe in Kaspa's fundamentals or its future potential. Maybe they see this downturn as just a great buying opportunity, not a sign the project is failing. They could be looking at tech developments, network growth, future uses, things that aren't reflected in the current gloomy sentiment. It kind of encourages you, the listener, to think about different strategies, dollar cost averaging, value investing, looking beyond the immediate price, the scary headline.
Wow. Well, what a ride through today's news. We've touched on the social and political side with the X-bans, seen the regulatory scene shift with that huge Genius Act in the U.S., and heard Europe's concerns, tracked market momentum, those big Bitcoin ETF flows, that wild $3 million prediction, and even got into some specific altcoin stuff where smart money might be looking, and this Kaspa situation buying into a crash.
Yeah, putting it all together, the big takeaway, it's how incredibly complex and linked this crypto space is. Regulation, sentiment, tech, investor moves, they're not separate things. They're constantly interacting, shaping each other. It's a dynamic system. Understanding one part often means seeing how it connects to everything else.
Absolutely. So, as we wrap up this deep dive, here's something to chew on. You've got all these forces playing out a Senate bill defining stablecoins, analysts dreaming of multi-million-dollar Bitcoins, smart money betting on crashing assets. How do you see that balance shifting over the next year between innovation and regulation in crypto? Will one side kind of win out, or are we just headed for a more, complex dance between the two? Something to think about.